Welcome to The Explainer. Today, we're skipping past all that digital hype, stepping completely away from our screens, and uncovering a massive, hidden goldmine of high-margin, physical side businesses. In an economic landscape where inflation is just so sticky and everyday costs feel like a constant squeeze on our wallets, diversifying your income, it's no longer just a luxury, it's an absolute necessity. But hey, we aren't going to talk about getting rich quick on the internet today. Instead, we're diving into the absolute power of the tangible. Look, if you're feeling that squeeze of inflation right now, and who isn't, you might assume the only way out is by staring at a screen, trying to crack some social media algorithm, or building a complicated app. We've kind of been sold this idea that a modern side hustle has to be digital, right? That you have to be a virtual assistant, a crypto trader, or an influencer to make real money. But what if the most lucrative opportunities are actually sitting right in your own neighborhood, completely offline? Well, prepare to have your expectations totally shattered, because renting out something as completely mundane as, say, pink and gold bouncy castles for children's parties, that can realistically scale up to $20,000 a month. Yes, 20 grand. This isn't just theoretical math. These are real numbers generated by everyday people who finally realize that local physical services have incredibly high profit margins once that initial equipment is paid off. Okay, let's look at the agenda. We'll be covering 1. The digital hustle illusion. 2. The power of boring. 3. The bouncy house empire. 4. Scaling property management. 5. High margin local hustles. And finally, 6. Treating it like a business. Section 1. The digital hustle illusion. Why online isn't always better. You see, the internet constantly promises this super low barrier to entry. But here's the catch. That means you are competing globally, which frankly exhausts so many focused learners. Take dropshipping, for instance. It's kind of like playing Monopoly with real money. You're out there selling the exact same luxury minimalist phone cases as thousands of other people, which is exactly why only 10 to 20% of those stores even survive. But then, look at local services. Yes, buying physical tools takes an upfront investment, so there's a higher barrier to entry. But your competition is strictly local, the demand is immediate, and the profit margins are incredibly real. Section 2. The power of boring. Physical assets as cash machines. So when you provide a tangible service, you are solving a right-now problem that an algorithm literally cannot fix. But how do you actually scale that? Well, true scale here doesn't mean chasing more online clicks. It means acquiring physical assets that you can deploy over and over again. Once you own a piece of equipment, your only ongoing costs are basically maintenance and logistics. Every single time you rent it out after hitting your break-even point, you're driving exponential revenue with highly manageable costs. Section 3. The bouncy house empire. Scaling party rentals. Financial educator Marco actually hit the nail on the head when talking about bouncy houses. He notes that once your initial $1,000 to $50,000 setup costs are covered, the margins become incredibly lucrative. He says, and I quote, "The rest after that is pretty much pure profit." Just think about it. You buy a commercial-grade inflatable for a couple $1,000, you rent it out for a few $100s a weekend. Within just a few months, that asset has completely paid for itself. Every single rental after that goes straight to your bottom line. Now, this is the completely unsexy but totally proven playbook to scale from just one inflatable castle to a massive warehouse operation running multiple parties every weekend. Step 1, you buy the asset. Step 2, you hustle locally to book those gigs, birthdays, christenings, community events. Step 3, once you have steady cash flow, you hire a crew to handle the delivery, setup, and teardown so you're not trading your own time for money anymore. And finally, you take those profits and expand your fleet. Suddenly, you aren't just a guy or girl with a bouncy house, you are a full-blown event logistics company. Moving on to Section 4, Scaling Property Management. Real estate returns. What's wild is that you can actually leverage physical property for huge returns without even owning it. You don't need millions in capital. Look at the property manager model here. You earn a steady service fee strictly by handling bookings and maintenance for the actual owners. Or take the Airbnb hosting model. Whether you own a spare room or do rental arbitrage, hosts are pulling in an average of $366 per guest. The flexibility you have to create cash flow in the space is just massive. A quick reality check, though, and this is exactly why you have to treat this as a dynamic business. Local municipalities can suddenly ban short-term rentals literally overnight. So you must always be prepared to pivot your strategy. We've seen it happen in countless cities, right? Heavy regulations come down, turning a hugely lucrative Airbnb operation into a complete bust. You have to stay informed, adapt to local laws, and maybe be ready to pivot a short-term rental into a mid-term corporate lease if those zoning laws change. Section 5. High-margin local hustles. Repeatable frameworks everywhere. The crucial point here is that this scaling framework isn't just for bouncy houses and real estate. Once you master the mechanics, you can apply it to almost anything. Look at some of these options: junk removal hauling, mobile car detailing, winter snow removal, or even tool rentals. I mean, you can rent out power tools that are just gathering dust in your garage to your neighbors. These are grounded, highly repeatable businesses that serve immediate local needs and perfectly fuel the sharing economy. Which brings us to Section 6, treating it like a business, the unsexy necessities. Listen, if you want to actually hit that $20,000 a month mark, you cannot just fly by the seat of your pants. Visualizing your revenue breakdown is absolutely critical. Because if a kid falls off your pink and gold castle, a simple piece of paper waiver is not going to protect you. You absolutely must invest in commercial insurance, which takes up about 15% of your revenue. As you scale, you'll need warehousing, box trucks, and vehicle maintenance. Factoring these completely unsexy necessities into your pricing from day one, that is exactly what separates a struggling amateur from a highly profitable pro. Taking the time to build out a robust, local operation is honestly the most direct path to escaping the economic squeeze. Sure, it takes a little more sweat equity up front than just setting up a digital storefront, but the moat you build around your business is so deep. Algorithms change, digital trends fade, but guess what? People are always going to need their driveways cleared, their houses cleaned, their tools rented, and for sure, their kids entertained. So look around your own community and observe what people actually need on a day-to-day basis. The goldmine is out there, literally sitting right in your own backyard. So I'll leave you with this final question to think about. What boring idea will you scale?